What's up traders, welcome to Failure to Displace. In this video we're going to take a look at this morning's London session on Euro USD. But before we jump into the analysis, I just want to apologise for the lack of content last week. I had a few family commitments I needed to take care of, and I got seriously sidetracked by looking at a new hedging strategy that I thought was going to be a game changer. However, it hasn't worked out as planned. I definitely seem to suffer with shiny object syndrome instead of just sticking to my current plans. Anyway, normal service is going to be resumed. We are back looking for some fantastic entries using our unicorn model strategy. Here we can see a great trade bagging 3.6 hour from this morning's London session. It's not the traditional unicorn model, but we can see the confluences stacking up. We'll jump into the analysis now and see how we came up with this potential entry. Before we jump into our lower time frame analysis, we're going to have to conduct a little bit of higher time frame analysis here because we have pumped up massively and we are currently floating in the middle of nowhere. Starting to put more emphasis on the 1 hour time frame, specifically looking at the recent swing highs and swing lows. So I want to mark out this hourly swing high as our buy side liquidity, and I'm hoping that session liquidity lines up with these levels. Obviously hourly swing highs and swing lows are more significant than 15-minute swing highs and swing lows, which are generally highlighted using the session liquidity tracker. And I do want to go back in time because we are in the middle of nowhere at the moment, so I want to see what's happening. We've had very bullish price action. I'm going to look for any kind of reversals. I want to see what kind of liquidity we've got around us. So we have to go right back to the 30th of August. We've got some buy side from the Asia high. And then we have the daily high from the New York AM session on the 30th of August. So those, we obviously had a large pump up in that time frame and then pull back. So we could be potentially rebalancing a lot of this price action from August. Let's have those on our charts. And then we'll drop down to our 15-minute time frame now. We have our session liquidity tracker showing us untapped levels of session liquidity. This is the extended green lines, which does line up with the hourly swing high that we put in. And then we do have obviously New York PM session lows. We can see we've just been very, very bullish. Every single session has been putting in new highs. So a strong bullish trend. You can find links to all of the indicators that I use down in the description box below. So if you want to set your charts up to look similar to mine, then details are all down there, along with a quick setup video. Just going to change our imbalances fair value gap indicator to one that works in replay mode. We've marked out our Asia high and our Asia low. We can see that Asia was certainly not a consolidating session. So the first thing that we want to note when we come into the charts is, was Asia consolidating? If Asia was consolidating, then we've potentially got the Judas setup where we look for a sweep of the Asia high for a reversal trade. This to me is a trending market. So Asia is displacing out of the previous day's high. We've got a new week opening gap that's highlighted in orange here. This big fair value gap is displacement above the previous day's high. So this isn't a failure to displace closing back in the range where we'd be looking for a reversal. This is displacing out of the range, and we're currently pulling back into this 15-minute fair value gap. You can see 50% of the fair value gap lines up perfectly with the previous day's high. We do want to keep an eye on 50% of that level. When we drop to the lower time frames, we need to know how this fair value gap is being respected. It's by far the most significant fair value gap on the chart at the moment, and it does fall just above the new week opening gap. Also, because this is trending, we're potentially looking for a continuation to those untapped levels of liquidity we mentioned just a few moments ago. Potential reversal areas would be around optimal trade entry or certainly into a discount. So as you'll know from previous ICT teachings, we look to buy in a discount, so that's anything below the 0.5 or the 50% fib, and we are looking to sell in a premium, anything above the 50% fib. So we're just tapping the 50% fib now into this 15-minute fair value gap. So if we can pull into this area, this is a legitimate area to be looking for longs if we're going to be targeting these highs. So I don't necessarily need to see a sweep of the Asia low in this instance to look for a long position. We'll see how price reacts in this area. I am noting that we've traded straight through the new week opening gap. So we left the new week opening gap, blasted straight through it. So this is a potential draw on liquidity and a potential support area now. So price may revisit this before going higher. So it's nice to see that we've got confluence with the optimal trade entry and this fair value gap as well, along with a retest of previous day's high at that level. Let's drop onto the 5 minute and start scrolling through price action and see what we are presented with. So our session is going to start at 2 AM, so we're going to be trading 2 till 5, and as always we're going to be looking for entries around the open of a 15-minute candle. Now, as we are in actually this fair value gap and in a discount, I'm going to open up on the 1 minute chart just to see what we've got. We've got horrible price action. So we're just in consolidation here, so I'm going to want to see strong move outside of this range at least. Sweep these relative equal lows for a potential long. So we're going to need some kind of movement down before we start looking for a reversal. So we do sweep that. We want a strong buyback now, which would make this a breaker block. And we don't get it. So that there is currently an order block. If we were looking for the trade, what I would have wanted to see was we put in a high, swept that high, swept the low. We want to see it break through that with displacement, closing through this, leaving a fair value gap in this area for a test and a go. This bearish candle has put pay to that. We've not closed straight through this, so that order block still stands. So this is not our entry model that we're looking for. Tapped 50% of that 15-minute fair value gap perfectly. So eyes are on 215. So we're looking at the open of the 15-minute candle, see if we can get something at 215. It's not nice price action, back and forth, overlapping, so we've got no displacement candles here at all. So in price action, displacement candles are what's going to drive our decisions. We're going to be looking for significantly larger candles than the candles around them to confirm a move. We're not just looking for fair value gaps. At 230, we've put in a new low. Again, looking at the price movement, high, low, high, low, high, low. We want a break of that. This would be our breaker block, so we want to break through this with displacement and then go. As things currently stand, this is a 1 minute order block. Let's get rid of this previous one because we don't need it. We're not displacing through it. So again, we've got a fair value gap here, but we're pulling back into the fair value gap. And we've had a rejection candle there as well. We'd want to see significant break of structure displacing above. So we want to see larger than average candles here, which we're not getting. I'll go 245. I'll put in a new low. Again, we're looking at these three up closed candles now, are our last order block. So again, we're looking for displacement through that, which we're not getting. What's interesting is we have tapped the very top of the new week opening gap. So we're not into the new week opening gap, but this orange shaded area obviously has just been touched with an engulfment candle at that point. Kind of grinding through, so we've ground through the top of the order block, so we've got to break a structure at this point, but again, this isn't displacement, so I wouldn't be looking to take an entry here. 245, there's nothing there, so going up to 3, open the silver bullet hour at 3 AM. So this is a breaker block because we have traded through it. So the last up closed candles, they created a swing low and we've traded through. So this is a breaker block, but this isn't the unicorn entry that we're looking for because we haven't got displacement through the breaker block and we haven't left a fair value gap. So we're going to need much more confirmation before we look at taking any entries. So we see 3 AM comes, that's a displacement candle. So you see this, basically these 1, 2, this engulfs this whole price leg here, and so significantly larger candle, and we've left a large fair value gap at that point as well. So we have seen displacement. It's happened above our breaker block. We can see we'll put in the low, put in a high, low, kind of equal highs at this point, swept the low, so this is like inducement, so we've pulled some liquidity and then broken higher. So I would class these two here as a breaker block. So these would have been an order block. If price was going to come lower, they should have resisted price. They haven't, so we could potentially come back, test this area into a fair value gap for continuation. We are at the open of a 15-minute candle into the silver bullet hour. Prefer to take entries 3 minutes either side of the open of a 15-minute candle, which means that I would take this if the price can come back, tap the top of this breaker block, I want 3 PD arrays as my support level for the idea. So place my stop loss 3 PD arrays below. So I've got the fair value gap, I've got this consecutive down closed candles, these are an order block, and then I've got the breaker block. So there's my 3 PD arrays. I've place the stop loss just below, which is just under 5 pips, perfect size. And then for a target, we've got really nice equal highs resting here for buy side liquidity. So that would be my first area of interest, which is essentially clear out all of this consolidation, this choppy price action. So that would be a perfect entry. And unfortunately, nope, we've not got tagged in and we've gone straight to take profit. So there was no entry at that point. Keep these on for future reference. 315. Wouldn't be looking for a reversal here. This is not a significant high. So if I was going to look for a reversal, I would have wanted to take one of the session liquidity highs or those previous hourly highs that we highlighted earlier. So I'm not going to be looking to short this, especially given we've been so bullish over recent weeks. Got a strong move down. You do have a breaker block at this point. Just point this out if you were to take a short here. Put in a high, put in a low, put in a high, lower low, so we've traded through. And we've got a fair value gap in there, so this breaker block is valid for a continuation down, but not a trade I would take, given that we've not swept a significant level of liquidity. Price does come back, tap the breaker block. Grinding lower. Uh, 330, sorry, that would have been an area to look at, which we're not in an area of interest here. Tap the top of that fair value gap. So we're looking to monitor what's going to happen at the 50% level of a fair value gap. It's just choppy price action this morning. Nothing at 345. Into the top of the fair value gap now. Closed through the fair value gap. So we're into the breaker block. We've closed underneath 50% of that fair value gap. So that tells me that that is not as strong as we would like. I'm not going to be using that as a sole criteria for a long trade. Back into this, back into the top of that earlier breaker block that we highlighted. Nice rejection wick. So still not close through that fair value gap. The bottom of it is holding price. I'm kind of wicking into this breaker block. Get rid of this upper breaker block. So we're wicking into that first 1 minute breaker block area, respecting the bottom of this 1 minute fair value gap. So although we've closed through 50% of it, we are still respecting the bottom of it. And again, so coming up to 4 AM, so this is just the close of the silver bullet hour is coming up. Huge displacement here. So again, you can see the significance of these larger than average candles. This again has engulfed many bearish candles. So this is showing here really good support. We're supporting this from this breaker block. Price has not been able to come lower. We've respected this 1 minute fair value gap. And we've had a huge displacement, leaving another bullish fair value gap. And what's significant at this point is that we've just covered over this bearish fair value gap. We've had a strong displacement down and then a strong buyback. Where these two overlap, these two inefficiencies overlap, this is a balanced price range, which is one of my favourite PD arrays. We generally find a very strong reaction when price comes back and retests that area. So this isn't the unicorn model that we normally go with. However, balanced price ranges are a significant PD array that I do like. And given the fact that we are respecting this bullish breaker and that bullish fair value gap as well, with clear targets above us, in already very bullish price action, coming into the 4 AM open. Let's see how price reacts. So just tap the bottom of the BPR, the top of the BPR at 359. 4 o'clock, yeah, we're respecting that. So this is interesting price action. It's not our unicorn model, but we're respecting the BPR. We've got a rejection candle. So this little doji candle here with a rejection wick coming into the balanced price range at 4 AM. Again, respect of that BPR. So I would take a long position from the break of these highs, hoping that this will support price. Stop loss below the low. So the 5 pip stop loss again, which is ideal. We're monitoring kind of the 50% area of that balanced price range. See how it holds itself. You can see we tapped 50% perfectly with that wick. This bearish move has stopped just above the 50% level. We can break this bearish candle's high. So we respected the low. If we break that high, I would be expecting price to continue higher. The obvious target, we've got low resistance liquidity here. So internal liquidity going up to the current session high. So I would take my take profit 1 at that level. Bang into the new hour. Again, respects it perfectly with a large bullish engulfing candle. So this would be a great signal to buy at this point. Large engulfing candle after a rejection wick, respecting a balanced price range, knowing that we've been supported on our breaker block that we identified a while back in the session, and respect of this bullish fair value gap where we can see price is just wicking, does not want to close below that fair value gap. Lovely rejection wick again. So again, you could have had an entry at the break of this high instead. Either way, we can see that the BPR is holding and this breaker was holding previously, and this huge displacement candle is showing us a buy program is in play. One thing actually I should point out, that there was showing disrespect of bearish PD arrays. So we had a bearish fair value gap, which this large engulfing candle also closed over that bearish fair value gap. So this is showing that bullish fair value gaps are being respected, bearish fair value gaps are being disrespected. So again, we're seeing failed PD arrays on the bearish side and bullish PD arrays being respected as extra confluence. Straight up to take our buy side, so literally a zero drawdown trade here. Straight up 1.81, so that would be TP1. Then our eyes are on our levels of liquidity above us that we highlighted, one being the current daily high, which I would take as a TP2. Which we have smashed, and then you could be holding runners for further buy side, 3.7R. Again, really nice price action. It's just driving for these levels. So that was the old Asia high, I believe, from August, and then we have that August daily high above us as our final target, which is 4.87, which as it stands, not taken. So a significant pullback. And up to live price action, we have not taken that previous high. So if you've got runners, you could potentially be holding those, but we had a solid 3.6R trade at that point. So it's not our unicorn model entry, but we can see how this breaker block was supporting price, leading to this balanced price range. Really nice candle formations with the engulfing candle at the open of the 4 AM candle for a potential entry long. I didn't trade that live, as I mentioned at the start of the video. However, it's great to look at this in hindsight and look at potential areas where we can get in on the action. Hope you found the analysis useful. If you did, please leave the video a thumbs up. If you've got any questions, leave them down in the comments section below. And likewise, if you're enjoying this kind of content, please consider subscribing. Thanks for watching, and I'll see you again in the next video.